We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up SWAV. We are in a 12-month time frame. Price action, last candle to right hand side is a bearish red candle, spiked down to a low, side by side with the second last candle, so we are receiving that consolidation. We do have price action overall, higher highs of structure. Price action overall, lower lows of structure. Adding the midpoint. Also adding second level lows and second level highs. Current price is sitting at 184.89, so if price pushes up, it'll tag that resistance line. And purple at 185.18. If price pushes up further, it can tag that black SR line at 189.94 before tagging the midpoint within that area at 185.18. If price pushes down further, price can head down to the second last candle body of that candle, which will be near the numbers of 179.45, before tagging the midpoint within that area, which will be near the numbers of 182.27. So let's take a look at what's going on in price. So we can see that the overall highest high and lowest low is between the price and second last candle in the market. So that bearish red candle was that support for that retest. So when that price did start off, it started off at a low and just spiked up to the high. So what that market is reading, it started off at a low, pushed up to a high, came back to retest, and that retest is just consolidating sideways until we see price breaks out that area, and if so, it'll identify as a push retest, and the market will push again. So with reading the charts with the colors of current price being a bearish red candle inside of a huge second last candle doji that was a push up from a third last candle, this market is reading as a double top with a double retest from the second last candle wick, third last candle wick, second last candle wick, and current price action came back to retest that area. And it's trying to see if we're going to see if we receive that momentum for that market to push up. So we are looking for the breakout of that second last candle body to the top side or the bottom side to push that market up, down, or sideways. So far, price is towards the bottom side of that support area, headed down to the 6-month time frame. So now we're on a 6-month time frame. 6-month time frame reading as a bearish red candle. So price. So we still looking for the breakout now as a price second, third, and fourth last candle. So what that's identifying, price is tagging that resistance area. So what that market is doing is it started off at a low. So if we think about that market spiking down with the red candle, coming back up for that second leg, retest, pushed up, retest, and if we receive a bullish green candle, market is coming from that W formation at the high. But if it drops down, it's coming from multiple spikes up to that high. We'll talk about that on the 3-month time frame. So on the 3-month time frame, if it does push down from that area, we read in the opposite side of those spikes. So with the price second, third, fourth, fifth, sixth to last candle or seventh to last candle spike up to that high. That was the first push up before the retest happened, and the market spiked up again, came back to retest and spiked up again. But this area here, which is the dominant areas that creates that double top for price to see if it's going to drop down. So if it does, we'll see that market coming from that first, second, third, fourth. But right now, price is just at the closeout of that M structure. So if that market pushes down, we'll start seeing that break for that retest for that market to come from that double top and retest. Or that market could still continue to consolidate between the midpoint of the purple lines that we created. Working our way to the monthly time frame. So on the monthly time frame, we see the overall structure. So breaking down the structure, we have price action high, price action low. So we can see price is near more the low side. And if we add the midpoint right in the middle, price is below the mid. So bring it up a little bit. Price is below the mid. And when that market did identify that push up from the bottom, came back to retest. Now we see the formation of the W, first, second, third, fourth. Retest, but still can create some momentum. So market is currently sitting at second level lows on that zone area, and if it can still respect that area and push up, if not, we'll start seeing price break our purple support line, and it will identify that break and retest as we walk down the time frame. Working our way to the weekly. So the weekly time frame, price action is still within that zone area. So that zone area is considered our midpoint. So we see the high, we see the low. So if this market is respected and it pushes up at this area and we see the breakout of that zone, then market's coming from that first, second, third, fourth retest. Market pushes back up to the previous areas of the highs. And if it pushes out, we look for the break to retest to see if that market's going to push up further. Working our way to the daily. So daily time frame, zooming in the price is a bullish green candle. So we are on the downside of that zone. So that market identifying the break, came back for a full retest. So we're looking to see if price is going to enter back into that zone. And if it does, market's creating a new structure, a pattern. So it will be identified as a first, second, third, fourth break into the zone retest for that market to push its way up for the double bottom. But if it's rejected at this area here and drop down, we'll talk about down the 4-hour time frame. It'll identify as and we'll add the midpoint of we add the price action midpoint, which will be the zone. So if we add the zone in this area, what do we see? Price action has broken the zone, came back to retest the zone once, came back to retest the zone for the second time, entered inside the zone. That's why we see that formation of that W. But as I said before, if it is rejected, then we'll see that rejection and market will work its way back through, coming from that pattern at the midpoint, which will be identified as the break and retest, which is the first, second, and third. Market pushes down from a double top formation. Working our way to the 3-hour time frame. Price action is a bearish red candle. Spike down to a low. It just shifted up, so it left a bit of a spike. So now we can see that formation for that first, second, third, fourth retest. Still looking for that bullish green candle to see if it's going to push and break out that zone, unless price action still pushes down with the bearish red candle and start breaking through the downside of that zone. But so far we are reading as a retest, and we're going to see if it's going to follow with the bullish green candle to push that market up. Headed down to the 1-hour time frame. Price action side by side with the second last candle, still reading the same structure as the second last candle. Previous time frame, the 2-hour time frame, which is a support. So if it pushes up, as we'll see the engulfment of the second last candle in its 1-hour time frame, we'll see the market engulf the price action that will be identified close enough for the break and retest for that market to push up. But so far, we still looking for the engulfment towards the average out for the fourth to last candle in the market to the top side or to the bottom side. Market breaks its way through the resistance. You'll see the zone break. If it start breaking its way down, it will break through the midpoint of that zone to tag the bottom of that zone, and you look for the break and retest towards the bottom. Okay, guys, this is Cam Jones, FX, SWAV, Stock.